Hey, what is universal whole life insurance? You've probably heard of an IUL, Index Universal Whole Life Insurance. Okay, so there's two types of universal whole life insurance policies: Index Universal, Variable Universal. So a universal whole life insurance policy, let's start at the beginning. Whole life insurance, permanent insurance. So we know that. Universal whole life insurance is just whole life insurance that's linked to market growth. Now remember, linked, not inside. It's not inside of the market, because if your money was inside of the market, you would be getting dividends on that income, but you're not. It's linked to market growth, which means that your money that you put in the cash value that you have, which grows substantially faster than regular whole life, that money grows with the market, typically the S&P 500. So imagine this, it's practically life insurance and a retirement account combined into one. It's really great and really attractive for people that are working and a little bit young. Doesn't really matter your age though, to be honest. I've written a few of these, people love them. So the difference between Index Universal and Variable Universal whole life insurance policies do not have a floor to protect against losses, but there also isn't an income ceiling. So in both policies, by the way, income is tax deferred on your cash value that is linked to the market. But in Variable Universal Whole Life, no floor to protect against losses means that you could lose money if the market performs poorly. But no ceiling against gains means that you don't have a cap on what you can perform with. Additionally, in a VUL, you are doing the investing, so you have more potential for growth, but there also is more risk. In an IUL, it's the complete opposite. There's a floor to protect against losses, which means, let's say I write you an IUL in 2 days, and in 3 days, the market goes to negative 25 for the rest of the year. Okay, negative 25 points. How much money do you lose? $0, because there's a floor to protect against losses in your Index Universal Whole Life Insurance policy. However, the downside is there's a ceiling against gains. So let's say the market does 13% and your policy allows for a cap at 10%. Okay, the insurance carrier is going to eat that 3%. That's just basically going to go in their pocket. IULs are attractive for people that want whole life insurance, a retirement account, no risk of money loss, cash value growth, and peace of mind. If you're interested in life insurance, send me a private message.